Today, crypto prices rise as a delayed September inflation read showed prices rose less than expected. President Trump addresses his decision to pardon Binance founder Changpeng Zhao, and Rettig of Jito Labs breaks down her conversations with lawmakers this week as the crypto industry pushes for comprehensive regulation. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies are in the green as we head into the weekend and as we get a fresh read on inflation despite the ongoing government shutdown. Prices that U.S. consumers pay for goods and services rose less than expected in September. Stocks turned higher on hopes the Fed would keep cutting rates, and the story in crypto markets was similar. By noon Eastern, Bitcoin was pretty much unchanged, trading at the $110,000 mark. Ether rose to about $3,890, and then XRP, it climbed nearly 3% to $248. Now, looking out at the week, around noon Eastern, Bitcoin was up more than 3% over the past 7 days. Ether's also up for the week, and XRP is up more than 7.5% since last Friday. All of these cryptocurrencies notched their first weekly gain in 3 weeks. Okay, real quick, let's get the latest on Trump's pardon of Changpeng Zhao. The president addressed the decision during a press conference yesterday, saying that he granted the pardon thanks to lobbying from CZ's supporters.
I don't know him. I don't believe I've ever met him. But I've been told by a lot of support. He had a lot of support. And they said that what he did is not even a crime. It wasn't a crime, that he was persecuted by the Biden administration. And so I gave him a pardon at the request of a lot of very good people.
Now, CZ pleaded guilty to enabling money laundering on the Binance platform. That guilty plea was part of a massive $4.3 billion settlement between the crypto exchange and the DOJ. And along with stepping down as CEO, Zhao served 4 months in prison. Meanwhile, Democrats are slamming the president's decision to hand down a pardon to the crypto founder. We told you about Senator Elizabeth Warren's concerns yesterday. Well, Congresswoman Maxine Waters, the top Democrat on the House Financial Services Committee, also put out a statement yesterday saying, quote, CZ has spent months lobbying Trump and his family while funneling billions into Trump's personal crypto company, World Liberty Financial. The pardon was a payoff and a blatant example of the kind of pay-to-play corruption that Trump and his administration continue to engage in. Congresswoman Waters is referencing a Wall Street Journal report back in May, which said CZ was helping World Liberty Financial in its global expansion plans. That's something that World Liberty has denied. All right, jumping to our main story. We're also keeping an eye on Washington's efforts to regulate crypto. Now, this week, industry executives met with U.S. senators to push forward crypto market structure legislation. Rebecca Rettig, chief legal officer with Jito Labs, was one of those leaders in attendance. Crypto World's Talia Kaplan spoke with Rettig yesterday about what was accomplished in D.C. this week and where we go from here.
Well, you have been very busy lately. I mean, crypto executives, they met with U.S. senators this week, pushing to pass market structure legislation. Coinbase CEO Brian Armstrong was at the Capitol this week for those meetings, as well as Chainlink co-founder Sergey Nazarov, who we spoke with here on Crypto World immediately following meetings with Senate Democrats on Wednesday. He said that it was evident that there's a strong commitment from Senate Democrats to get the bill done. You also participated in those meetings on Capitol Hill, and so I'm wondering if you felt that way too, and what was the big takeaway for you?
Great question. I did get a takeaway that Senate Democrats are committed to seeing market structure legislation move forward. I would say that the takeaways from the room were 2 or 3-fold. One was, this is a complicated topic. We don't want to rush through it, and we have a lot of education to do for ourselves. But 2, we are committed to moving forward, and we want to move forward productively and collaboratively. I think that they wanted to have much more one-to-one dialogue, and I've even seen that coming out of the meeting, that there is direct outreach, which is great. And 3, everybody wants an answer to illicit finance and DeFi. I think those are, questions that need to be answered more generally. And obviously DeFi is the thorniest and most complicated, but also, part of the space, but also one of the most innovative parts of the space as well. So we've all been working on the Hill to educate about this, including the DeFi Education Fund for a long time. And I still think there's a lot of work to do because it's complex.
So you mentioned DeFi. When we spoke with Nazarov on Wednesday, he pointed to the leak of a Democratic Senate proposal on decentralized finance, which would significantly expand regulatory oversight of DeFi platforms. That sparked industry backlash and was a focus at the meetings with Senate Democrats, according to Nazarov. Can you break down for our viewers why the proposal triggered pushback from the industry? And do you think Senate Democrats listened to the concerns and seemed open to the ideas of those crypto executives participating in Wednesday's meetings on the topic of DeFi?
I'll take your second question first. So the answer is yes. I think everybody was very open to learning more about DeFi, to thinking of constructive paths forward, and not to cutting off the special part of the innovation that is this permissionless, autonomous type of software. So there's definitely openness to that. I think there was a lot of pushback or concern from industry about the proposal that leaked because much of it didn't take into account some of the permissionless parts of the software or may have overlooked the ability for the software to evolve over time. And I think it also, whether intentionally or unintentionally, may have captured software developers within its bounds. And obviously, developing software on its own is not something that we should necessarily be regulating, like financial authority, financial conduct, or financial services. So I think some of that is what sparked things, but I think there is this openness now to collaborating and understanding that industry is willing to talk through what makes sense to ensure that policy goals are met, right? Protecting users, protecting markets, and combating illicit finance. So there's openness there on both sides.
How do you think the government shutdown is affecting the timeline of when we could possibly see a crypto market structure bill become law here in the US? Do you think that could still happen before the end of the year, which is what some lawmakers, including Senator Cynthia Lummis, have been hoping for?
I think there is certainly a desire to see a bill at least go through a markup before Thanksgiving. I think it may be very challenging given the government shutdown. One of the biggest drawbacks right now from the shutdown is that a number of detailees from the CFTC who were sent to help Senate Ag work on market structure are furloughed at the moment and so are unable to help. And they have a lot of expertise on the digital asset side of things from the CFTC, Commodity Exchange Act perspective. So that I think may be hindering the progress a little bit, but I think there is a commitment for everybody to keep working on bill text and sharing drafts and working to get something that may be possible to the Senate floor by Thanksgiving. So it seems unlikely a month from now that we are going to see a full draft because we've seen different pieces here and there, but I think I really took away from yesterday's meeting that there's a lot of commitment to at least making an effort for that.
So when negotiations resume, what should we be paying attention to from the banking and AG committees as it relates to crypto market structure? What's next?
I think we need to see a draft from the Senate Ag Committee for sure. That is going to handle the entire CFTC side of things. And that's going to have a lot of information about where people will register for trading, selling, and things like that for tokens that are considered commodities, which will be most of them. And that's where we need the spot market authority to come from, is from the Senate Ag draft, because there's no spot market authority at the CFTC or the SEC right now. I think we will see a significantly revised draft from Senate Banking as well, especially after the discussions of yesterday. And we will certainly see new language coming out that tackles a number of different issues. One of the things that was clear leaving the room, and one of the last topics discussed, was the question of ethics. And so I certainly think that Senate Democrats want to have some form of ethics language in here as well. So we'll see what happens there. But I think we were going to continue to see new iterations and new drafts coming out of both Senate Banking and Senate Ag.
So as I mentioned earlier, you certainly have been very busy. You also just got back from Europe before you headed to DC. You wrapped a round of meetings with regulators in Europe focused on crypto. So how are regulators there deviating from US regulators on crypto supervision?
Great question. So I'll start with the UK. They are in the process of trying to put together rules and laws. They are doing it both for centralized intermediaries and for stablecoins. But, that's very straightforward in many ways. We know how to regulate both stablecoins. We have it in the US now with Genius, thankfully, and centralized intermediaries. We've seen that language both come out of the House with clarity and also come out of even the Senate banking draft. So that's pretty straightforward. They are in the same place that we are in the US in terms of we don't know what to do on DeFi and understanding that it is more complex. They've been engaging on this topic for a very long time. They've had a number of consultations come out and taken feedback. So that's where the UK is. The EU is in a very interesting place because they are now seeing the implementation of MiCA come forward. There have been a lot of challenges with that. There were rumors about whether MiCA would be reopened by the EU or by the European Commission to make amendments to that. I don't think that is going to happen, but I think they are grappling with what it looks like to have crypto legislation and or crypto laws and try to implement them. And so I think that is I don't want to say a cautionary tale because that may be too dramatic, but I certainly think that is something that we should be taking away in the US, that getting crypto legislation right is extremely difficult, even for centralized actors, because that is what the legislation in Europe, MiCA, tackles, which is centralized actors, and they're still having a lot of problems with implementation. So as much as there is a lot of appetite and a lot of hope in the industry to be pushing this legislation forward by Thanksgiving, there may be some benefit to taking a little time to digest and think about what this legislation is going to look like or what form it should take.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.